Hello traders, this is Tahir Yunus and welcome in this most important session. This session is only for serious traders, serious investors, and for those who are actually looking to develop a trading edge over the other players of market, who are looking for a profitable trading system or a profitable trading strategy that actually work. No matter you trade forex, future, stock, crypto, whatever, by any means, if you are connected with any financial market, this video is for you. No matter you are a volume based trader, you follow VSA concept, price action, you follow ICT logics, or you are an advanced order flow or footprint chart based trader. This video is for you. This session is for you. I am going to share with you the most precise, the most advanced way of trading, way of analyzing the market with a multi-dimensional way. I am going to provide you like a microscope to analyze each candle, each movement of market with an edge and provable edge. At the end of this video, I am going to back test the strategy, the trading system I am going to provide you in this video. I am going to back test that trading system, that trading strategy, that trading methodology on the past 10, 15, 20 years of data with multiple inputs, with multiple dynamics, with multiple take profit levels, with multiple stop loss levels, trailing stops levels, and you will see how in a long run my that strategy, my that trading system, trading method is working. So this video is exclusively for serious traders, because this video can last up to 3 or 4 hours. And this is the second part of the video. If you are just watching this part of the video, there is an other part of this video, the first part, that I will drop the link in this I section here or here. Yeah, I icon here. I recommend you must watch that video first and then come to this video. It will take almost, both of these videos almost take your 5 hours, roundabout 4 to 5 hours. Yeah, and I believe you are going to spend your 5 hours only when you are serious with your trading career, when trading is your passion. Otherwise, you will skip this video. So don't skip this video. There are a lot of value I am going to put in these sessions, and these sessions are free for you. Just see the videos, these sessions. Just follow the concepts I am going to share with you, and share your feedback in the comment section of this video so that I can produce more valuable content for you. I see you inside the video. See you.
Please make sure am I still audible? Because I just changed my mic. A few
Yeah,
members.
it's okay, sir.
All
Your
right.
voice and speaker are okay.
Okay. Okay. We are going to cover the two main tools, the two major tools in this session. The first one we have already covered, wave chart index. The second one is the cumulative effort and result index. These two tools we are going to cover in this session. This session can last.
Excuse me, sir. Some members they cannot see the screen.
Some members are not yet. Let me share. Yeah, it's visible to most of the members. If the members are still not yet able to see my screen, you must check your internet connection. You see all the screens are visible. I am just changing all the screens.
Yeah, it's okay.
Make sure everything is fine. Okay. So in this session, we are going to cover the two major tools. The first one is wave chart index. The second one is the cumulative effort and result index. These both tools are the leading tools, the pillar, the backbone of the VC trading method. Not only we will try to learn the concepts, the parameters, the logics behind these tools. We will backtest it as well. We will test it on past 10 years, 15 years, 20 years data, and we will try to gather the results, how it would perform if we start this strategy from 2000, 2005, 2010 till now. And we will test different parameters as well. But before that stage, I will try to deliver each and every setting, I will try to clear each and every concept behind these two leading tools. So let's jump to my screen and let's start. Okay. Let me add the both indicators, wave chart index. Let me add the second one. The cumulative effort and result index. Okay. Okay, we will cover these two tools in this session. The first one, the wave chart index, we have already covered and discussed in previous session. And the majority of the participants of this session already familiar with this tool. The second tool is the cumulative effort and result index. Actually, this is the graphical version of this tool. Let me just revise wave chart index in just a few minutes so that the new members, the new participants of this session can also get an idea, a rough idea about this tool. Then we will continue. Okay. The wave chart index, here, every wave, at the end of every wave, we have a certain data. This data is based on the current movement of market, the current wave of the market. It can show you total volume, delta volume, bid volume, ask volume. It can also give you idea of the effort that is consumed in that wave, the result of that wave, the difference of buyers and sellers of that wave. Yeah, the demand that is consumed, demand and supply that is consumed on that particular wave. So all the leading data, all the data that is actually moving the market, actually fueling the market, you can analyze wave chart index. Yeah. So this is a very rough and short introduction of the wave chart index. You can say that this is an advanced methodology, an advanced and more precise way of order flow, where you are not just calculating the data of every candle, but you are calculating, analyzing the data of each wave. Today, instead of digital form, here you see all the data is here in digital form. But the same data we can analyze in graphical form as well, in the form of cumulative effort and result index. Let me just adjust it a bit. The cumulative effort and result index is the graphical form of wave chart index, but there are a lot of other settings, inputs, and parameters and usabilities of this tool. This is a versatile tool. You can do almost any kind of analysis by using this tool, only single tool. And literally, believe me, I required 5 to 6 hours. If I want to explain this tool in depth, I required 5 to 6 hours to explain this tool only, this sole tool only. There are a lot of parameters, lot of settings, but in this session, I will try to sum up the useful settings, most of the settings that are very useful to the most of the traders. Okay, let's start from its visual look. You see on the positive side of the histogram, you can see here, we have two type of colors, two type of data. The red color and the green color. The green color is showing the results of buyers, the positive movement of market. The green color on the positive side of the histogram, actually this is called a histogram, where we have values on the both side of the zero. You see here, this is a zero line, and we have values on the both side of the histogram. The positive side, the negative side. On the positive side histogram, the green value is indicating the price movement, the positive price movement. You can see here, this wave will start from here, wave is starting from here, ending from here. You can see here, the wave is starting from ending here, and it is showing the positive momentum of market, the positive movement of market. And in this movement, On the negative side of the histogram, that the color, the green, the blue color is indicating the effort that is consumed to move this market from, move this price from this level to this level. This is called effort that is consumed in this move. Similarly, the red color on the positive side of the histogram is showing the results of the sellers, the result of sale side, the negative movement of the market. You can see here, the price start moving from here to here, and it is showing, indicating the price movement from this level to this level in a graphical form, so that you can easily compare it and analyze it from its visual look. On the negative side of the histogram, the yellow color is indicating the efforts of sellers, the efforts of bears, the effort that is consumed to drag this price from this level to this level. This is just a graphical representation, graphical information of this tool. I hope it's clear to you now. So
Yes,
we have 4 types of data. Yes, Mr. Tahir, is it clear?
yes, sir.
So let's summarize it. We have 4 types of data: the effort of buyers, and the effort of sellers, and the results of positive results, I mean the positive price movement and the negative price movement. Mr. Neil, is it clear to you?
Yes, it is clear.
Oh, perfect. Okay. You can change this color as well according to your preference. You see here, you can change, always change here. These are the colors. Okay. Let's dive deep into this indicator, this tool, and see how it can give you an extra edge over the other players of market. Let me go into the settings. These 2 settings, the volatility percentage and the accumulation, are the same settings that I have already mentioned in our previous session. You see here, these are the same settings. The volatility percentage, the accumulation, the both values should be synced with each other. The recommended values are 0.5 for gold in 15-minute time frame. You can test other values as well, but for this session, we will backtest it. We will conduct our analysis based on this setting. So the volatility 0.05 we have set in the cumulative effort and result index. The same volatility we will set here on the wave chart index, so that the both indicators can sync with each other. Is it make sense to you, all of you? Is it clear?
Yes.
Yeah.
If you have not yet watched our previous session, the wave chart index here, you must watch that session in order so that you can understand in a better way our next indicator that we are going to conduct here, going to learn here. Okay. I am not going to elaborate here, not going to explain here in detail what is the meaning of volatility and the accumulation, because I have already covered it in our previous session. That is belong to wave chart index. You can learn it from our class 1. Here you can change the colors of these waves, the graphical wave, just like instead of green, for example, if I want to see it in purple form, you see here the green color will change in purple here. You see here, but the green is fine. This is very normal stuff, usual stuff. I am not going to explain either. This is very important stuff. Adjust positive scale, adjust negative scale. So how to use it? For example, in some time frame, for example, let's go to 1 minute time frame. It's loading. Yeah, you see here, it's showing lot of effort that the negative scales of now is showing more than positive scale. It's more than large, it's larger than the positive scale. So you just need to adjust it according to your preference. It will not affect your actual analysis, but it is just for the visual purpose. So how you will adjust it? Just now, if we want to adjust it, what we will do? We will decrease the negative scale. Go to this setting. Here the negative scale is set to 200. For example, let me put here like 20. Let's see how it's work. You see here? Now we can see this scale in a more effective manner. The graphical interface now is very clear to us to analyze the market. There is another way to do so. Instead of, for example, this is 200. Instead of decreasing the negative scale, you can increase the positive scale as well. For example, I increase the positive scale to like 100. It is, let me adjust it like 20. Yeah, you can see here. If I put here like 10, it will be more effective. You see here? So there are two ways to adjust it. It will not affect any kind of your analysis, any kind of your results. It is only for the visual purpose. It solely depends on your preference. Yeah. So no recommended settings here. You can just adjust it according to your preference. Is it clear, Mr. Tahir Nails?
Yes,
sir.
it's clear.
All right. Okay. Okay. Let's move to 15-minute chart.
Tahir, sir.
Yeah.
Sir, when we change this value and
Mhm.
effort and bars are changing, so it does not impact to the price which is moving up and down.
No,
Means,
not at all. Not at all. We are not adjusting the volatility or the accumulation. We are just adjusting our scale according to our preference. Yeah. So it is always better to adjust this scale in equilibrium, like 50% upside, 50% downside, according to your visual understanding. So it will not affect any kind of analysis.
Okay, because when we lower the value, the effort is more and result was
No. Actually, no. It is actually, it's not reducing the effort or results calculation.
Okay.
It's just changing its visual impacts only.
Okay.
Actual aspect ratio is not changing in any settings.
Okay. Clear.
Yeah, the comparison ratio from positive to positive and negative to negative will not change.
Okay. Very clear, sir.
Okay, all right. Let's move further. Okay. Precise results and precise efforts. What it does, it allows you to remove the extra noise and snags and gaps from the negative side of the histogram, and it is recommended to enable this input for more effective analysis and results. By default, this input is enabled. What is the meaning of that precise effort? Let me uncheck it, and you can, so that you can see the difference. You see, I just unchecked it, and it's just it's changing the results, these values. These, you see here, there are certain type of values here. I will explain it later. But you see, when I change this precise I change this to precise, these values will be changed. You see here, these are changing when I enable or disable the precise effort. What is the actual meaning of precise effort? Actually, it's remove the extra noise. In other words, the manipulation of smart money, the manipulations of big players from that price movement. Similarly, there is another input, the precise results, but this is not recommended. Yeah. You just need to enable the precise results, because if the smart money try to manipulate the price from one level to another level, yeah, it will be quite obvious to every trader. But smart money and institutes can easily manipulate with the volume, with their efforts, with open interest, with their demand and supply, by lot of tactics. There are many types of orders, just like the iceberg orders. Yeah, I believe most of the members of this Zoom are quite familiar with the iceberg. Niels, are you familiar with the iceberg orders?
To be honest, no.
No. Okay. We will cover it in some other session. The iceberg orders are not. Okay, let me show you iceberg. Let me show you here. Iceberg. Let me show you images so that you can have an idea. You see here, these are rock in the sea.
Yeah.
We can see a very little tip of the only very little top side of the rock, but
yeah,
there is a lot more inside the sea. You see here?
Yeah.
This is called iceberg. And in the terminology related to trading orders, the iceberg orders, if a trader, if an institute have a lot of quantity to sell or purchase, yeah, they
Mhm.
want to hide their quantity from the other players. They just show very little quantity in the order book, okay, and keep all the quantity, all the big quantity under that iceberg order. This is a type of order, like iceberg order. You can search it on Google. Yeah, this
Okay,
is just a
understand.
graphical example. I just
Yeah.
gave
No,
an
I
example.
understand.
Iceberg order. What is the meaning of iceberg order? They will just show you that they have very little quantity to sell, but actually their bags are full of demand or supply that can actually move the price in one direction, either long or short, depends on if they have demand or supply. So the smart money or institutes are not willing to share, willing that the retail traders like you, like me, like us can see. They don't want to see that if we can see that their orders. That's why they manipulate their orders with different kind of tactics. That's why we use the precise effort. So if they try to manipulate the market with different type of orders, like iceberging, or like any other tactics, with the volume, with their efforts, with the open interest, with the demand and supply, our system, the cumulative effort and result index, will just capture that manipulation and reduce and remove that manipulation and give you a clear picture of the market. Is it clear?
Yes, clear to me.
All right. Okay. Mr. Navin, is it clear to you?
Yes, sir. Very clear.
All right. So that's why we use precise effort. Okay. The other one is effort calculation source. There are three types of sources that we can use to calculate the negative side of the histogram, the effort. The one is delta, the one is effort. This is precise effort. The second one is delta. The third one is delta percentage. So I highly recommend to use precise effort, the first option. It is your preference. You can use delta, you can use delta percentage, but the results with the precise effort are more accurate and more reliable. Yeah. What is included in price in effort? The total volume of the wave, the delta of the wave, the delta percentage of the wave, open interest of the wave, the total demand and supply of the wave. These type of leading data are precisely included this first option. So I highly recommend you to use precise effort. This option is clear to you?
Yes.
Yeah, and you can always refer to this eye icon, yeah, to understand more deeply and more precisely what is the meaning of this input. Yeah. Okay. Let's move further.
Sir, one thing I need to ask. When this precise effort avoids this manipulation also. So when the time of news or any event coming like non-farm payroll or Fed rate, that's time it will be helpful for.
Absolutely, yes. Yes. Yeah.
Okay. Okay.
There are certain reasons behind it. You know, I will try to explain in any other session. Yeah, but before the news time, if you go to the micro time frame like 30 seconds, 1 minute, you can actually see what is happening behind the candles, what is going to happen. You can effectively predict the market, but I recommend to avoid to
News
just
trading.
predict the market before the news. Avoid news trading.
Okay.
Okay. This is very important. The most important part of this tool. What it does, additional data feeds and symbols. Instead of relying the single data feed, the single data source of the exchange. You know here, you see here, currently we are on the Oanda exchange. We are getting data from one exchange only, the Oanda exchange. But, you know, there are a lot of exchanges here, brokers here that are providing the data feeds of gold. You see here, Oanda, Forex.com, FX Open, Paperstone, IDC, 8cap, Sexo, Vantage, Global Prime. Lot of. Because the Forex, at the moment, we have opened the CFD market from Oanda. The CFD market, the Forex market is not centralized market. Unlike future market, this is not a centralized market. That's why the data is not as reliable as compared to futures data. That's why this is a myth. The most of VSA traders believe that the volume in the Forex market is not reliable, or the volume in the Forex market is not real volume. That is almost true, because this is not a centralized market. But we can get almost near to real data if we use multiple data feeds of brokers. That's why these inputs can help you. You can actually include 10 additional data sources, 10 additional data feeds. In other words, you can pull data. If you are, for example, you are trading, for example, you are trading on Binance. You are trading Bitcoin on Binance. But you know, there are many other exchanges. The Bitcoin are traded there. So when you extract data, for example, KuCoin, you can extract data from KuCoin, from BitMEX, from Huobi exchange, from any other exchange of your choice. So in this way, you will not be only relying on the single data source from the single exchange. Actually, you will be accumulating and averaging all the data of that specific pair from the multiple exchanges. Maybe it is quite possible that the data from one exchange can be compromised. But if you are pulling data, extracting data from 10 different exchanges, you can confidently rely on that data. That's why these options are quite helpful to you. Let's see how this icon, the information icon, is helping you. It is saying that allows you to add multiple data feed sources from other brokers' exchanges to extract data from the same symbol, For example, if you are trading Bitcoin USD on Binance, for better analysis and effectiveness, you may also extract data for the same symbol from 10 additional and other exchanges. Similarly, for future stock indexes and Forex, you may also extract data from the same symbol from your desired other data providers or brokers. When you extract data for the same symbol from different reliable sources, it may also reduce the chances of manipulation and pitfalls. There is a tip here that I have mentioned here. Before adding any additional data feed, ensure that each additional symbol you are adding is supporting the volume indicator. You may test it by applying the volume indicator separately on that symbol. So this is a quite precise example. Okay, let's see how it impacts our results. Okay, at the moment we are pulling data only from the chart symbol. The chart symbol is Oanda. We are only extracting data from Oanda. Let's pull data from other exchange like XAU USD. Okay, let's add data from Paperstone broker as well. Okay, I have added it. I just want to show you a little difference here. You see here, there are numbers here, 97, 87. 97, 87. I am just enabling data from one additional signal, one additional data feed, and see how it's changed. It's 87, 97, 86. Let's see how it's changed this data. 97 and 86. You see here, it's now 96, 87. Let's add another data source like okay, let's gold prime. Okay, this time let's add gold prime and see how it's at the moment 96, 87. Let's check it. Let's enable it and see how it's impact. You see here a little impact. So this is how you can implement, you can add your desired brokers, additional 10 brokers. I am just unchecking it. Okay, I hope this is clear to you. This section of the indicator is also clear to you. Neil, it's clear to you?
It's clear to me. Yes, thank you.
All right, Mr. Tahir?
Yes, sir. It's okay.
All right. Naman, it's clear?
Yes, sir, definitely. Very clear.
All right. There is an other input, filtered data from additional data feeds. It's mean all the data you are pulling from other exchanges as well, it should be filtered as well, just like the precise data here. So you should check this input if you want to filter out all the data that you are pulling from additional exchanges. Okay, now this is the most important part. The most important part. We will discuss this later. Let's first try to analyze the market with its graphical interface. So how it's helping to predict the next move of market. Just recent move, okay? Let's try to predict the recent move with the help of cumulative effort and result index only. Okay, let's compare these waves to each other and see how it's providing us the clues and the guess idea of the next move of market. You see here, this is the upside move here and consumed a lot of effort here. It is showing the effort, but the price movement is very little here as compared to previous moves. You see here, on the green side, this is a price movement. This price movement, if we compare this price movement, let me use, if you compare this price movement to this and this effort to this, Nil, can you see any anomaly in it, any imbalance in it?
Yes, of course. The triangle, the blue triangle on the right hand side is much bigger, so the effort is much bigger, but the result is very poor. Yeah, because the green triangle is very low compared to the left one.
Absolutely, yes. Let me remove the drawing here. And okay, and what if you compare with this green to this red? Are you able to find anomaly in this comparison as well? If you compare this green upside movement, this up with this down movement.
Yeah, it's similar. The price is much higher compared to the effort. Less effort, but higher increase in price. Yeah.
Higher increase in price.
Well,
here,
actually, it's
less effort. Yeah. On the downside, the bears are consuming less effort and getting more results. But on the upside movement, the bulls are struggling to and consuming the more effort, but almost no results as compared to the previous two waves. So this is not just a one-side comparison. This comparison is two-sided comparison. So what this kind of anomaly is trying to tell you, Mr. Tahir, are you able to?
Sorry, sir.
I said this type of comparison. What this type of comparison, this data imbalance is trying to convey to you. It's quite obvious. The price is in the upside, the price is taking a lot of effort. Yeah. That's why there are very bright chances the price can reverse. Additionally, you see here, this level is a kind of a resistance level. On the resistance level, if we see this kind of anomaly, it's giving us a very clear clue that the price is going to reverse.
Yeah.
And you know, that's why if you are in Mr. Tahir, you see, that's why the indicator is in our signal service, the indicator was telling us, okay, sale here, possible sale. You see here, lot of sale signals, sale. In 150-minute time frame, the price is indicating a sale. 90-minute time frame, 50-minute time frame. The cumulative effort and result index is indicating us that price is going to go down. You see here, today, all the signals are in downside. So this is how this indicator help us to analyze and predict the market before actually its move, its actual movement. You see here there is some type of data on each wave, that C and NC. What is the meaning of C and NC?
Continuous and non-continuous.
Absolutely, continue and non-continue. Niels, these are the
Yeah.
results of continue and non-continue comparison.
Mm-hmm.
Yes. Please keep attention what I am going to deliver now. This is the most important part. Visually, we are just trying to analyze that we in this example, in this example, we just did here, that we are comparing this to this and this. We are just trying to analyze, trying to measure the market with graphical interface on. Okay, but these continue and non-continue comparisons are also giving us the same information, but in a very effective manner. What is continue and non-continue comparison? Let me share my screen from my tab so that I can be able to demonstrate to you what is the actual meaning of continue and non-continue comparison. Okay, I have just shared the screen of my tablet. Is it visible?
Yes, sir. Visible.
All right.
Yep.
Okay.
Visible.
What is continue comparison? And what is non-continue comparison? What is continue? Continue comparison and non-continue comparison. There are two types of comparison actually. The first one is continue and non-continue. The short form of continue comparison is C is equal to continue. And NC is equal to non-continue. Okay, it's very clear. Now let me demonstrate what is continue and what is non-continue comparison. For example, this is an up wave. Okay, and after every up wave, there must be a down wave, and this is a down wave. Again, up wave. Down wave. Okay. If we compare this down wave to this down wave, it is called non-continue. Similarly, if we compare this wave to this wave, it is called non-continue. Non-continue means because there is a gap between this comparison. There is always an other wave between these two waves that we are comparing. The continuous comparison, if we compare each wave, each previous wave with the next wave like this is continuous comparison. Like this is a continuous comparison. Like this is a continuous comparison. So I hope this is clear to you. Mr. Tahir, Nails, is it clear?
Yes, sir. Yes, sir.
Yes, it's clear.
Perfect, perfect. Okay, let me remove this one. What is the results? This is if we are comparing with this to this and this to this, there must be a results. The comparison results, the calculation of comparison. See, if we compare with this to this, like if this wave has, for example, $50, the value of this wave, just example, the value, if the value of this wave is 50, and we compare it with this one, what can be the value of this wave? Just give me a rough idea. Is this wave, just like this wave is A, this is B. Can we say that the wave B is like almost the 50% more
Yeah.
more than the wave A? Are you agree with it?
Yes.
If this is the 50, so this must be like almost can be 900, because almost it's 2x of this.
Yeah.
Okay, so the results will be here. The non-continuous results, we can say it's like the 100%, because it's the 100% of this. From 50 to 100, it's 100%. If we compare this wave to this, what will be the results? Can be the results? Neil, it's your turn. Just try to predict it. Just try to measure it graphically. If, for example, if this is like 75,
It's almost the same, I would say.
if it's 75, yeah,
Yeah.
what it can be?
The continuous. Hold on. This is 100%.
This is
So
this comparison. Because this is a continuous comparison. If this wave is the green wave is the length of the green wave is 75. With this aspect ratio, what can be the length of red wave? Like for
Around
example,
120 plus.
$25% more, or
almost.
almost.
Yes, almost. So it's because we have put here it's 10, it's 100. The length of this wave is 100.
Mhm.
So 100 is almost 25%, near about, yeah, of this wave. It's more. So the continuous comparison result will be almost 25. This is a just rough example, just to give you a rough idea. Is it clear to you?
Yeah.
Okay, let's have a deeper example of effort and result. This is the up move here. Okay. And in this move, price moved here, for example, like, okay, $10. Price moved here from point A to point B. Price moved $10. And it consumed, for example, the effort that is consumed here is, for example, is 10 as well. This is effort. On the next move, here, the price moved here from B to C. The price moved again same, $10 almost, but this time it consumed effort $20.
So more effort, less result.
More effort, less result.
This is a sign of reversal.
Reversal, absolutely yes. On the next move, for example, here, so price should reverse here. According to this calculation, the price should move here, move upside. On the next move here, again, from C to D, like here the price moved $15. And what effort it's consumed here? Okay, let's this time 5. What is it indicating you? If you compare it non-continue, like this, if you compare it this to this and this to this,
Less effort, more result. It means the market will move in the same direction.
Same direction. Market can go in the same direction, because in the both comparisons, continue comparisons, it's took only effort is only 5 as compared to the previous effort. The results are more here as compared to previous results. Same, the effort is again more, again less here as compared to this, less effort consumed. But the price movement is again more as compared to this movement. So price is more likely to move in the same direction. But in this point, in this stage, we can have a retracement.
Yeah, depends on the resistance level or something.
Absolutely.
Like that.
So in the retracement, if we again see, if we again able to analyze that the price movement is here $5 only, yeah, $5 only, but the effort it consumed here it's just like 50. What is it? What it is indicating?
The same reversal sign.
Yes, the reversal sign.
What?
The reversal sign from the downside to upside.
Yeah.
Yeah. The most probably the price will continue to reverse from its direction because it's consuming more effort, less results. In this candle, in this comparison, here, for example, let me change the color of this one. Yeah. This comparison, more effort, less result. This comparison, more effort, less results. This comparison, more effort, less result. So we have compared previous 3 to 4 waves, continue, non-continue, and we are getting the same results, like the same continue, non-continue comparison results, that the less effort and more results. So what do you think? Will it give us a kind of confidence in our direction, in our move?
100%.
This is how the cumulative effort and result index empowers you to make your decisions based on these leading data. This is just a graphical examples to make you sync with our next session of this class. You can see here, let me share the screen. You can see here, continue, non-continue. Some are in negative, some are in positive. Is it clear, Nils, to you? You see here?
Yes, it's clear.
Continue here, 90 minus, non-continue is minus as well. The continue is here positive, positive, negative, positive. Some in some calculations, one is positive, continue is positive, non-continue is negative, and other comparison, the both are positive or the both are negative. What is the meaning of this negative positive results? And how they are indicating you digitally? We have just learned graphically, yeah, but these data, this comparison, continue and non-continue comparison results are also telling you something. There are certain logics behind this non-continue comparison, continue comparisons. I will just explain in next few minutes. Actually, these continue and non-continue comparisons are the result of each comparison, the continue comparison, the non-continue comparison. For example, here, the continue comparison is minus 65. Minus 65, 67. What it means? The continue comparison, that this result is based on this comparison. It is showing that the effort here consumed in this move is 67% less than this comparison. The effort and result comparison of this move, of this down move, and of this down move, up move, is combinedly less than the previous wave. I will explain to you later here in few movements what is the meaning of negative and positive. I am just trying to deliver it to you so that trying to clear your concepts regarding these positive, negative values. On the non-continue comparison, it is indicating that if we compare this negative wave to this negative wave, I mean this down wave to this down wave, the comparison is here negative 338. What is the meaning of negative and positive values? Here, I am again going to elaborate it on my tab screen. This is very important, the most important part of your analysis. Just focus it here and try to understand. If the wave is positive, okay, and the results are also positive, it means there are higher chances, the most probably it's going to continue to the same direction, but after a little retracement. Similarly, if the wave is negative, results are positive, it means that the price is going to go down in the same direction again. Similarly here, in the same direction, because we have positive result. But after a little retracement. So if we have positive results, so it means price is more likely to continue its direction. If the wave is positive, it's going to in the positive side. If the wave is negative, it's going to happen in the negative side. So positive means the price will continue its direction. Is it clear?
Yes, sir.
Yes.
Inversely, vice versa, if we have positive wave and results are negative, so it means price may reverse from any near resistance level. Similarly, if the wave is negative, the results are also negative, it means price can reverse near spot level. These are the meaning of continue or non-continue comparison results. And you see on our chart, you see here there are two types of comparison: continue and non-continue. For example, here let me revise it. If here, for example, this is continue results and this is non-continue results. Here the non-continue results are negative here. Okay. Similarly here, like the continue results The continued results are positive, and non-continued results are here negative. So these both results are conflicting with each other. You see here? On the continued comparison, the comparison results are positive. On the non-continued comparison, the results are negative. If this is the case, yeah, what is the meaning of this? Price can still move according to your analysis, but there are less chance to do so. To this happen, there are less chances that the price will move as you supposed, as you are trying to predict based on this analysis. What I said? The price can still move according to your analysis, but there are less chances because it's only based on single comparison results. But if the both continue and non-continue results are indicating you the same direction, just like let me give you on the next slide, example on the next slide here. Just like this is continue comparison, and this is on the non-continue comparison, it's a negative here as well. Here, this is continue comparison, okay, and here on the non-continue comparison as well, the results are negative here. So it means our both comparison and non-comparison results are matching to each other. So the chances are more when you have the same continue and non-continue results are same, the chances are more that price will reverse or continue. If the both continue comparison and non-continue comparison results are in same direction, if both are positive or both are negative. So these are the use cases of these continue and non-continue comparison results. Is it clear now? Till now? Mr. Tahir, Niels?
Yes, yes, sir.
Kevin?
Yes.
Anything, any query related the session till now? You can ask. Okay. So it means everything is clear. Perfect. That is good.
I have one question, sir.
Sure.
Might be you will share it later on. In the screen there is a S and B are visible. So what are the criteria behind this comparison? How the system gives us signals for buy and sell?
Yes.
How
these are based
convert?
on this is what I am going to cover in the next part of this session.
Okay, that time we will cover it.
Okay. Next, jump toward the next part of this session. And this will be the most important part, the most effective and the most important part. So keep your attention here, keep your focus here. Let me uncheck it all here. These are for the alerts purpose only. If you want to get alerts based on effort and result imbalance, like if there is a bicondition, like more effort on the positive wave, just like, let me elaborate again here, just like we here established, like here, in this comparison, we established that here the price will go up based on our these analysis. So we can set alerts based on our customized calculations. Just like, let me give you a very simple example here. For example, this is a wave here. Okay. We have continued results here, plus 100. Non-continue, we have like plus 25. So this is a scenario where we are aiming that price may go up. Okay. So in this situation, so based on these results, if we want to get alert, if we want to be notified alert from trading view, we can set this condition. Actually, this is a condition. How we can set it? Very simple. You see here, there are certain type of checks. I will explain each input, each checkbox very deeply. Enable alerts on negative waves, the first option. If we check this input, this parameter, we are telling the system, we are giving commands to the system, to the indicator, that alert us only on the negative waves. Similarly, if we check this input, this checkbox, enable alerts on the positive, we are giving commands to the system that give us alert on the positive waves. So if we check both of them, positive and negative, so on the positive wave, on the negative waves, we will get alert. Alerts on the based on continue, non-continue comparison results. These are the continue and non-continue comparison results. You see here, the first positive threshold. These are the thresholds. In the current example, we are giving command to system if the threshold is 30 or more. If the threshold is 30 or more, for negative and positive, for both results, for both waves, alert should be triggered. Similarly, first negative threshold. What is the first? The first, there are 3 types of alerts here, almost 3. The first are not 3, but I think 4 types. Yes, the the real-time alerts, the first confirmation alerts, second confirmation alerts, third confirmation alerts. There are 4 types of alerts here. I will try to explain all these types of alert in this session, because I am just trying to cover all the possible options, the possible settings, the inputs in this entire session. We have already, I think so, we 1.5 hour we have already consumed till now, but hopefully in the next almost 45 minutes I will try to sum up. But this is very important, this part of session. Okay. So first, I am going to explain only here the real time and the first confirmation alerts. You see here, there are the first confirmation, second, third, and real time. You see, these are 4 types of alerts. So I will explain. Firstly, I will explain only the first confirmation and real-time confirmation alerts. Let me first explain the real-time waves. What is the meaning of real-time waves? Let me elaborate it here. The real-time wave here mean before the completion of the wave is completed when the opposite side waves formed. So the previous waves deemed that it's completed. Just like this, let me give you a clear demonstration by using bar replay. Yes, you see here, these all waves are completed. The previous waves are completed, but this wave is not yet completed. This wave. So this is called real-time wave. So it's mean we are giving command to system that alert us, give us alert whenever the system is our logic is met based on our continue non-continue comparison results based on these inputs, just like this in these inputs, these 2 inputs. I am concerning here only at the moment, as I mentioned, the first and real-time alerts. The first and real-time alerts are belongs to only the first threshold, the first positive threshold and the first negative threshold. So when we give command to system that alert us on the real-time wave, the real-time wave means before the completion of this wave. Yeah, so this is called the real-time alerts. You see here on this winning and losing scoreboard, I will explain it, elaborate it later on. But at the moment, you see here the continue comparison results, the non-continue comparison results are both synced, the both in positive. So it's mean the price is most likely to have in the same direction, in the same direction of the wave. The wave is positive. Here the results are positive. The continue results are, you can see here the positive. Non-continue comparison results are positive. And graphically, you can see here as well, the price is moving upside and consuming very less effort here. You see here, the effort of the bulls are very less as compared to previous both two waves. Mr. Tahir, Niels, are you understanding? Are you keeping?
Yes.
Are you?
Yeah.
Yes, sir.
Yeah.
I need your concentration.
Yeah, we are with you.
So even graphically, we can see here, price is consuming less effort and moving upside as compared to previous two waves. So that's why we can see here the continue and non-continue, both results are also indicating us the positive results. What I demonstrated on the just in previous few movements, when the wave is positive, just like this. Let me share the tab again. When the wave is positive here, the results are positive, continue results are positive, non-continue results are positive, the price will continue its momentum. So here, our conditions are met that I just demonstrated, and just let me bar replay here. So if we set alert here, for example, we see here, there is no B sign here at the moment. There is no B sign here. If I want to have a B sign here, if I put these continue values here, the B sign will appear here. Let me show you how. This is the answer of your query, Mr. Tahir.
Yes, my answer.
Yeah, okay. Okay. The continue here, 537. I am going to here continue. This is the continue. Let me show here. Enable alerts on continue waves. Okay, I have enabled it. Okay. Okay, the positive threshold is, for example, I said 537. Okay. You see here, the B appeared here. For example, 536. Let me put low. You see here, the B appeared.
Okay, got it.
If I increase it to 38, it will vanish. I hope you understand.
Mhm.
Yeah, got it. Got it.
Clear,
So, sir,
Mr. Neil, is it clear to you? Perfect.
Yes, it's clear. Thank you.
Okay. Yes, Mr. Tahir.
yeah, my question.
Mhm.
Instead, like before, it was mentioned 50.
Yeah.
So-
Before it's like mention 50. For example, I put here 50. So whenever the condition met 50, it will alert here. Let's see. You see here. You see the 50 condition met and at this candle. You see, it is showing here it at the previous candle.
Okay.
Okay, but the 530 condition met on the next candle here. For example, if I put here like 10. So instead of giving alert from here, it will, I think so, it will go one candle previous maybe. No. So it's mean here from this candle, it's start from this candle, the threshold results increased from your threshold. It's more than 10 here. Okay, that's why it's indicating. For example, if I put here like 600, it will vanish because it's more than our threshold. Got it?
Yeah.
Another thing, for example, here I put like 536. Okay, it will appear here again. But if I uncheck it, okay, if I uncheck the continue comparison here, yeah, here, so it will vanish here from again vanished here because I have not checked this input. The third option here, the positive, you see here, the second option. enable alerts on positive wave. If I uncheck this, it will still vanish because I have not enabled alert on the positive wave. You see here?
Yeah, got it.
Just try to understand the use cases of each built-in inputs.
As per my understanding, if we keep the first positive threshold more than 150 or 200, we will get the less signals. But whenever we get, it will be a very powerful. Is it?
It depends. It depends. We will at the last part of this session, we will back test it. Yeah, based by using universal back tester of VC trading method. We can back test it from last 6 months, 1 year, 2 year, 5 year, 10 year, even 2 decades from 2000. Okay. So it's clear till now?
Yeah, it's clear. Very nice, sir. Thank you very much.
Okay, thank you. So similarly, for example, yeah. So if we increase here, if we just continue to with bar replay, you can see here the price is moving toward our direction, but based on this alert, because this alert is, we have set this alert on real-time wave. Real-time means before the completion of the wave, while the formation of the wave. So this is called real-time alerts. Here. You got it? If I uncheck this real-time alert, you will notice that this will vanish because we have unchecked the real-time alerts. Okay, let's move toward the first confirmation. What is the meaning of the first confirmation? The first confirmation is same like the real-time wave, but it will alert us only when the wave is completed. When our threshold is met and the alert is the wave is completed. Just like let me give you an example here. Yes, this one. You see here, the continue result is 87. The continue alert is 87. So if we set alert, if we want to get, if we want to be notified and want to receive alerts based on this, so if I put like 80, okay, and if I check the first confirmation, it will give us the first confirmation here. You see here, the one sign. This is the confirmation, the first confirmation based on this this wave. Why it is showing here, not here? Because wave is completed here. Because, let me show you how. Let me play it bar by bar to give you a better idea. You see here, we received early alert based on real-time wave. Okay. Let me play it. Let's see when the wave is completed. You see here, the wave completed here. When the wave is always completed when the next opposite direction wave is started. I have covered it in my previous session how these waves formed, how you can control the formation of these waves. So this is first confirmation. In the first confirmation, when the wave is completed and our threshold is met as well, then the alert is triggered. So this is called the first confirmation. Is it clear to everyone?
Yes, sir.
Okay.
Yes.
What
But
is
can
the
we use it as an, sorry, Taya, can we use it as an exit signal or just like a retracement signal?
No, it's just like the it's a signal, but you will always, on the first confirmation, you will always enter in the market on the based on after the retracement, because when you receive alert, you the price is always already retraced to some extent.
Yeah.
And you need to wait to complete the price its retracement.
Yeah.
Yeah. And
Okay.
in the retracement, you will, in the retracement, when the opposite wave is forming, you can also double verify it based on the new comparison from this live scoreboard. You see here?
Yeah.
The negative, the wave is negative, the result is also negative. And what we have read, if the wave is negative, the result is also negative, it means price is going to reverse. So that's why it's double confirming you that the previous wave is positive, results are positive, next wave is negative, the results are negative, so price is going to be in the same direction as the previous wave.
Okay.
Yeah. I am just giving you the deep insights of the parameters so that you can build your own strategies, your own parameters based on your own preferences. As I mentioned many times, this is not a strategy. The VC trading method is not a strategy. It's a trading system. It's a method. You can develop a lot of methods, lot of strategies within the VC trading method. Okay, I will explain it in some time in our next session. Yeah, because we are already spent about 1.5 hours. Yeah, so I am just trying to sum up my this session. Okay, so I believe the first confirmation is clear to you now as well. As I mentioned, these two thresholds are always belong to real time and the first confirmation. Now let's come to second confirmation. What is second confirmation? Again, I have to go to my tab. Is it clear? Tab is clear to you?
Yeah.
Yes, sir.
Okay.
We can see it.
Second confirmation. What is second confirmation? For example, if the wave is positive, okay, the results are also positive. The next, it's mean, hey, till now, we have first confirmation only. Because the first confirmation is based on when the previous wave is formed. Okay. The next, after that, if the next wave is negative and results are also negative, so this is called a second confirmation, because the first confirmation is met here. Okay, then the second confirmation is also met here. So that's why this is called the second confirmation. How you can set it? Yes. We have a clear here, we have a very clear example here. This is the results of first, this is the always the results of first confirmation. You can refer, you can take it, consider it, that the results of first confirmation. You see here, continue, non-continue, because the first confirmation means at the end of the wave, when the wave is completed. So we will always get these results, these comparison results on the completion of each wave. So this wave is already formed. We have first confirmation. If we set now the second confirmation here, I have set the second confirmation here. Now you will see here, it will from 1 to 2, it will turn to 1 to 2. Let me give you here, because there is some other parameters as well. Okay. Let me play with it. Bar replay. Yes, here on the next candle here. Here you can see here the second confirmation. What is it indicating us? The first confirmation is based on the previous results, that wave is already completed, and on the next wave that is not yet completed, the wave is negative and the results are also negative, and fulfilling our second threshold. You see here, there is a second threshold here. Similarly to the first positive and negative threshold, there are second positive and negative thresholds as well. The same functions, the same parameters, I mean the same functionality based on as we discussed earlier. These are results. All these are results. So here, these negative thresholds are based on these results. These comparison thresholds. We have non-continuous results enabled here, and we have put here, for example, we have put here, if the non-continue comparison, if the second wave after the first confirmation is done, if the second wave that is not yet completed have negative values, then alert us with the second confirmation. Just like you see here, we have continued here. The 65 is more than minus 65 is more than minus 50. That's why we have second confirmation is showing here. If I increase it, for example, if I put here like 68, you will notice that this second confirmation will vanish. You see here, is it clear?
Yeah.
Yeah.
If I put like here 65, 64, it will be back. You see here? So this comparison results belong to this second negative threshold, because this is belong to negative, these are negative. So inversely, if we are looking for the positive threshold for the positive wave, then it will be like this. It will be use this threshold. These are a kind of I can understand a kind of new concepts to the most of you, but these are very powerful tools, very powerful inputs. You just first need to understand this, how to drive this leading tool. It's required a lot of practice. If you misuse these tools, if you are not using these inputs in an effective way, correctly, so it can give you wrong signals, wrong alerts. So that's why I am putting a lot of effort to realize you, to deliver you my best, so that you can use these tools effectively. So first and second threshold is clear to you?
Yes, sir.
Okay.
Yes.
Now the third threshold. What is the meaning of third threshold? The third threshold is belong to the retracement. So for third threshold will only fulfill after the first and second threshold. Let me go again on my tab. The first threshold, the third threshold is for the retracement. For example, there is an up wave here. Okay, our results are positive, which means it's fulfilling our first alert. Okay, it means first confirmation is done. After that, negative wave. Okay, results are positive. Negative wave here, the results are negative. For example, give you more precisely here. For example, here, negative results, negative wave. Now we want to give command to the system that don't trigger alert here, because it's quite possible the price may retrace down, more down. So we are giving command to the system that give us alert us only when the price retrace to a certain percentage of the previous wave. For example, if I put 50%, it will be almost a 50%. So only alert when price retraced to this level. So this is called third confirmation. Let me give you a live example here. You see here, retracement threshold. This one. Is this input is clear to you?
Yes, sir.
So here, for example, if I put here 30% retracement, so when the price retrace 30% and fulfill our first and our second threshold as well, it will trigger this alert only, otherwise no. So in this case, like here, it is the price is not retraced 30%. Let me bar replay it, so that I can check if it's retraced. No. let me give you, let me set a kind of lower here, a kind of lower threshold. It's just to give you the idea how you can see the third confirmation. I just reduce the threshold. Yeah, this one. Yes, here. Okay. Yes, you can see here. I have set
Yes, sir.
here. Yes.
Yeah.
Here the price it retraced. Here the price it retraced more than 30%. I think I have said 30% here or 40% like here. Yes, price retraced the 30% of the previous wave here, and it's fulfilling our first and second confirmation alerts. First and second confirmation threshold. Like here, if I put 50% here, you will see it will vanish. You will see here, these three will be vanished. You see here, because it's not yet retraced to 50%.
And also it changed the color of the candle.
Absolutely. When there is a third confirmation, it will also change the color of that candle so that you can indicate graphically as well. Okay, for example, I put 40%. Let's see if 40% is, this is 40% or no. Yes, this is almost 40%. So that's why this third confirmation is triggered. Is it clear to you?
Yes, sir. Very nice.
Here, the next option is here, the retracement source. There are two types of sources. Low to high, like from this low, you want retracement price to retrace from this and calculate it from this low to this high, or just from close to close. You see here on bar close. It means if it will just ignore the wick and count the body of candle. So it's your preference. Just like if I check the bar close, it will vanish. This condition will not met. Yeah, I think it's matching here again. Yeah. So it's your preference. You want it bar close or high to low. So I recommend to low to high is fine, because it will just take the low of the first candle of the wave and and high of the last candle of the wave. Yeah, and just on the next candle, next wave, it will just count the retracement, and based on that retracement, it will give you alert. That's it. So I hope it's clear to you now. Any query, any question, anything is that unclear till now, you can ask. One more thing, it is not necessary to check all the alerts. You can see here, I just disabled the first confirmation, the second as well. If I set first, second, it will show all here. You see here? You see here? All here. Because the third confirmation cannot be met before the second and first. If the first confirmation is not met, there is no way to meet the second confirmation. If the second confirmation is not met, there is no logic to meet the third confirmation. So the third confirmation is the last confirmation after all the confirmation. Based on your inputs. I am repeating again and again. These alerts are based on these thresholds. And you can customize these thresholds based on your preference and backtesting. I am just giving you the rough idea, the rough calculation. What are the logic behind these calculations, behind these inputs? Is everything is clear to you?
I have one question, sir.
Sure.
Many of our VC tool group members, they are approaching to me and they're saying our signals are appearing, but when we make that entry, the results are not coming in our profit. So now I understand that might be they're only putting 5, 10 or something.
Absolutely,
like
yes. As I said, it's only based on the results. Alerts are based on these inputs, these data, these results. So if you reduce these alerts, these inputs, you can get false alerts, false signals. Yeah. So you need to concentrate. You need to pay attention when you set alerts based on these inputs. So I believe this part of session is clear to you now. Mr. Neil, everything is clear?
Yes, very nice.
Yeah, it's clear. Yeah, very nice.
Perfect.
Agree.
There is another very important part. That is dual threshold. This is a killer. And the accuracy with these dual threshold comparison is absolutely ridiculous, unbelievable. First, let's learn what is dual threshold. It is very simple, very easy. I have explained all the previous stuff. Now it's time to relate all our sessions, all our previous 2-hour session to one by one with each other. All the parts with each other. Now it's time to sync. I am assuming you are taking notes. Yeah. And you will practice it. All the members, you cannot get anything of these tools. You cannot able to, it will be hard for you to able any kind of result from these tools if you are not practicing. If you are not taking seriously these webinars, these sessions. These are your trainings, for your trainings. If you have a very luxury car, but if you don't know how to drive that car, it will be useless for you unless you hire a driver. Yeah. So if you want to get maximum from these tools, if you want independently, confidently trade on these financial markets, you need to master these tools. You need to dive deep into these tools. I have never delivered this kind of deep session related to this cumulative effort and result index before. Okay, now let's talk about dual threshold. Very easy. You see here, on the end of each wave, there are two type of comparison, the continue comparison, the non-continue comparison. If we want to be notified only when the both continue and non-continue thresholds met our condition, we have this input, the dual threshold. Just similarly, the first positive threshold, the second positive threshold, we have here first dual positive threshold, first dual negative threshold, second dual positive threshold, and second dual negative threshold. It's quite self-explanatory. I don't think I need to explain it. Yeah, but I will, because I know there are many traders, many followers here, many attendees here. They can get it hard while understanding. So let me explain it again. Let me go to my tab. Okay, is it clear? Visible?
Yeah, visible, sir.
Okay. What is dual threshold? For example, this is wave. This is a wave here. Our continue comparison here. Continue comparison result is, for example, 10. Okay. Non-continue comparison result is, for example, here 25. So it means the both are positive. This is positive. These both are positive. Okay. I want to be notified, get alert only when the both are positive. Very simple. Let me elaborate. Give you a clear example here, just like, yes, this one. You see here, continue, non-continue. Okay. We have both positive results here in this example. We have selected here the continue. The continue. It means our first, this threshold will behave continue. This threshold will behave like continue. So the 434 result here is already more than 20. It means this threshold is already met. The first confirmation is already met here. The second one is non-continue. This dual first threshold is belong to this non-continue. This one, because this is, if this is continue, this will be non-continue. The 5, so 5 is not matching here. Is it matching here or not, Mr. Tahir?
Sir,
okay, let me take it. So 21 is already more than 5. So it means,
yeah, sure.
continue and non-continue both are matching here. Okay. So it should trigger alert here. It will show the first confirmation here. Let me see. Positive on continue, first confirmation 20. Okay, negative first and dual. Let me see another example. Why it's not showing here?
Sir, can you remove the red lines appearing on the chart?
No, I have not. Yes, okay. I think someone just. Annotation. Clear annotation. Clear all drawings. Okay, is it clear?
Yeah, thank you,
Okay.
sir. Thank you very much.
Okay, okay. I want to demonstrate practical usage of this dual threshold. Okay, let me give you example. Okay, first and continue. Let me see if yes. Okay. Yes, this one. You see here the continue and non-continue, both results are in positive. You see?
Okay.
Continue and non-continue, both results are positive. That's why we are getting here the first confirmation. Okay. The continue comparison. This is the first continue comparison. Here, if I put here 1800, because 1800 more than this threshold, so you will see this will vanish. You see here, it's just vanished.
Yeah.
If I reduce it to like 1770,
it will appear again.
It will appear again. Similarly, here, the non-continue comparison, this one is belong to this dual threshold. So 5, so 343 is already more than 5. So if I put here 350, it will disappear.
So it means the both conditions should be met and then it will appear.
Absolutely. If the both conditions met, only then this alert, this will met our condition
criteria.
Just like if I put 340, it's mean 343 is already more than 340. Okay, so it will appear here again. Is it clear?
Yeah.
The same belong to negative threshold and same belong to dual positive threshold, dual negative threshold. I think so. I don't need to explain the dual positive threshold now because it is the same replica of first dual threshold. There is one more thing that I left, that is the wavelength. What is the wavelength? The use case of wavelength, I think most of the members are already familiar with the wavelength, but let me explain it again. What is the wavelength? It is very simple, very simple. Just like if this is our first, this is a wave, okay, and if there is another wave, you see here, this is a very big wave and this is a very small wave. So if we want only compare the wave with a certain length, minimum certain length, yeah, so we can set it with the wavelength. What is the meaning of 20 here? It means the wave should be 20% of the previous wave, at least. before it triggered the alert. All the alert types, all the alerts, it's belong to all the alerts. The first, the real time. Is it clear?
Yes, sir.
Okay. So I think I have covered most of the stuff, and our session is already 2.15. So almost 2.5 hours already we have spent here. So I think it's enough for today. And I think so I have covered most of the stuff. You can let me, I think I have skipped the real time here. The scoreboard. The scoreboard is the real time score of bulls and bears, the real time score of comparison, the real time continue and non-continue comparison. You can get a very clear idea about the current movement of the market. The same logics, the same parameters that I have explained in this video, the positive wave, positive results, the price is most likely to be go up. Positive wave, negative results here, the price is most likely to be reverse. Negative wave, negative results, the price is most likely to be rejected, to be reversed. Negative wave, negative results, the price is most likely to be reversed from bottom to top. So I believe I have covered most of the stuff in this session. Yeah, it's time to back test. Yeah, I will just give you a very quick back test idea how I am going to back test it. The results I will test it from last, I think, 1 to 2 years, because we have no time here. So let me give you a back test. Let me show you the back test.
Sir, my humble request, before testing, can you share us a universal setting so everybody can...
Absolutely, yeah, very good, very good query. Yes, the universal setting here is put 0.05 here, volatility. This is for the XAU USD gold on a chart. Accumulation should be 10 here. This can be your own preference. You can put 50, 200, 100, anything. It's not going to change any result. The price effort should be selected. Precise here, the effort should be selected. No need to add here extra exchanges or brokers, but you can add. It's your own preference. I have not added. Enable first negative threshold, first positive threshold, enable alerts on real time, enable alerts on non-continue only. That's it. You don't need to check first, second, third. No, this is the very advanced concepts. You don't need to set this one. Just copy paste it. You need to put here 30. Just increase this threshold, the negative threshold, to more than 50,000, because we are only going to take trades that are continue, like to the buy direction, continue buy direction, or the continue sell direction. We are not going to play inverse with the market. Okay, no need, because we have not yet selected here first, second, third threshold. So no need to change here. No, anything, you can put anything here. It's not going to work because we have unchecked the second threshold. The wavelength here, you can put 35 to 30 to 35, like 33. It's fine. Yeah, retracement is also not be affected because it's only belong to third confirmation. It's not affect. The dual threshold here, you can put here 5 to 10, any value. I am putting 5 here. Okay. We are not going to play with the negative values, so that's why we are increasing it, because the negative value is always used for the inverse, for the reversal. So we are not using reversal. We are not using the second threshold, so it's not going to affect. Okay, the real-time alert condition. This is very important. If you want a non-repaintable signals, the non-repaintable alerts, you can set once per bar, on bar close. Because when the bar close, nothing can be changed. All the data will be printed on the chart. But if you want early alerts, early signals before the close of candle, you can go with the once per bar. It's your preference. I use once per bar always. But you can go with the once per on bar close as well. There are some other settings, other filters. If you want to just eliminate, just filter time, just like you don't want to get alerts from 1 a.m. to 3 a.m. Okay, you can set here that time filter. You know, when the market, or on the timing of the market, when the market open, yeah, the spreads or on that time, you can notice the ridiculously high spreads. Yeah, so to avoid alerts on that time, you can always filter based on your time preference. These are time filters. These are just to change. These are any other inputs are not going to affect your alerts. So these are the recommended settings. Once you put these settings, click OK. And just you need to just come here on these 3 dots, click on it and add alert. You see, add alert on cumulative effort and results. Just click on it. Okay, after that you can set here the notification. If you want to get pop-up, if you want to be notified here, want to be notified on email, yeah, you can set here. If you want to play sound, if you want to get SMS as well, you can set here. You can set the name of the alert as well, just like here, test alert. No need to change anything here. Anything else, you can just create alert here. It will, you will see here, it will just create another alert here. You can see here. Yeah, this one, the test alert here. This is active. So this is how you can set alerts. Anything else, Mr. Tahir?
Yes, sir. One most frequent asked question from many of the group members that, sir, we are getting the alerts, we are getting the signals. So how to take the entry? I know how to take. I am getting the profit, alhamdulillah. But the main thing is for all audience of this forum, they are getting the alerts as per the setting. So how to take the entry on the alert? And any one example?
Absolutely, yes. You see here, for example, that this is we have received here alert, a sale alert here. You see here,
Sir, chart window is not coming. Your window is coming.
Is it visible? Just like here, the sale alert here.
Yeah.
Sale here. Okay. You can sell here as well. But it is always recommended wait for a retracement. Retracement from the resistance, just like we are selling here. Okay, you can wait to price come up to the resistance level, just like here, price came up here, and then trigger entry on the best price. Let me show you the examples of alerts. You see here,
Okay.
let me show you here. Like, for example, you see here, you can read here. This is a possible sale condition. This is the alert message that you will receive with the every alert.
Yes, sir.
Yeah. So it is indicating that the possible sale condition. It is also explaining the reason of that alert. The reason is on the current negative wave, the price is moving downward with less effort as compared to the previous non-continued wave. Why this alert was triggered? When the wave is negative and the result is positive and reaches a certain threshold, it triggered this alert. You may start looking for sale scalping entry after a pullback. Just like I just mentioned, always wait a pullback. But if the condition of the market is very volatile and market is breaking its resistance or support level with the heavy threshold values, then you can take entries right after the alert without waiting the price retracement. And with the each alert, you can see here, it also show the time frame.
Yeah.
Okay, the ticker, the trigger price, the continue comparison results, the non-continue comparison results. Is it belong to real time, first confirmation, second confirmation, all the and additionally all the settings that you have already put. So the alerts, each alert is already self-explanatory. So how to use these alerts?
One more question, sir.
Mm-hmm.
This question from the same many of the students. That, sir, we are getting this signal and the time frame is 50 minutes and our chart is set on 5 minutes or 15 minutes. So how we can use this signal on 15-minute chart, but the signal shows 50 minutes?
Yeah,
So what
it's
is
always, yeah, I understand. So always come to that time frame that you have already set the signal so that you can see the behavior of the price movement on that specific time frame. You know, I have already covered in my previous session the story of market. So on every time frame, just like I go to like 1 day. Okay, let me give you a demonstration. On the 1 day, we have here a clear uptrend. You see here?
Yeah.
A clear uptrend. If I go to like here, the 15-minute, yeah, it's showing me downtrend. So it's always recommended better to go to the same time frame, okay, and analyze the market on the time frame that you are getting signal from. I show you the alerts that I have set some alerts like here. You see, I have set alert for 15 minutes on 15-minute chart, on 50-minute chart, 150-minute chart, 90-minute chart, 280-minute chart, 460-minute chart, 10 50-minute chart. So it all depends on your preference. And
okay,
today you
one
see
more
here,
question, sir.
I take your question. Yeah, you see here today the gold price dropped from 1948 level to almost here 1918 level. So our VC trading system started giving us alerts. You see here from when the price was 1930, price reached to 1938. And after that, no buy alert here. You see here,
Yeah.
Before that, the system was giving us to buy opportunity, to buy the market when the market was here at this level. Yeah. So our system captured the both move of the market, the buy move and the sell move as well. Not only one time frame, you can see here 150 minute time frame, 90 minutes, 50 minutes, 15 minutes, 150 minutes. So all the time frames are indicating that the market is going down. So you should consider the higher, you should only give worth and value to the better price, the alert that is triggered for the better price. It means the first alert is always better. You don't just need to trade any of the on any single alert. The additional alerts are only just for the confirmation that you can stay in the position. It doesn't mean that you need to take position on every single alert if the alerts are on the same direction.
Got it.
Additionally, it is recommended always use 20-25 pip trailing stop. Instead of take profit, always use trailing stop so that you can maximize your profit. You can capture the maximum move from the market. Yes, you can continue with your queries, questions.
Yeah. It means if we keep the same setting on different time frames, it will work. Is
Absolutely. Yes, I can show you. I am going to show you this in next few moments. Any other member have any query can ask. Mr. Neil, I'm going to unmute you. If you have any query till now, you can ask, please. Any other member? Okay. Okay, it's time to show you a back test. Okay, based on the current settings. Okay, for the back test, yeah, I have a very precise and a very effective way of back testing. Yeah, here it's a universal strategy tester powered by VC trading method. It shows you entries and exit on the chart. You can see here, it is entry, it is showing you short position here, and it closed short position in this level. Okay. You just see another entry here, it's buy here and close here. Okay, based on this back test, I'm going to show you the results of back test. What I have put here, let me show you. Okay, 10,000 points take profit, 10,000 points stop loss. It means 100 pips stop loss, 100 pips take profit. Okay. After that, I have put here the trailing stop, the trailing trigger. After price move 10 pips on your direction, you will start trailing your profit. The trailing here, I have set trailing distance, the trailing steps. Okay, and yes, this is for the back test. Okay, only. And the parameters that I have used here in this back test, okay, these are the same parameters. You see here, volatility 0.5, it is 10. I have not used any additional. This is the signal source of this back test. This is the cumulative effort and result, like the same setting that I have mentioned. You see here, the same setting, nothing is changed. I am going to back test in front of you. Okay. So this is the result of the back test here. You see here. This is the performance summary here. It took 500 trades. In how much time? Let me see the list of trades here. Yes. It started from the 2nd of March from 2020. It's like last 9-10 months. In last 10 months, these settings have taken 520 trades. Okay. The starting balance of the account here is let me show you the starting balance here. This is 1 lakh. This is, but you can consider it 1,000, because if you are using the leverage of 100x leverage, so 1,000 multiply 100 it will be equal to 100k. So you can consider it 1,000. Yeah. Or you can consider it without leverage as well. Okay. These are the inputs of back test. Okay. The base order size is the standard lot. It's based on one standard lot. And these are the results. You can see here. It took 52 trades, 91% accuracy. The profit factor, his drawdown, his average trade. Okay. This is on 15-minute chart. Let's put here, for example, if I put here the 50-minute chart. Okay. Let's see the results on the 50-minute chart. You see here, it increased the results. It took 538 trades, 91% accuracy, 2.9 profit factor. Here is the net value, net profit. Let's put net 90 time frame. On the 90-minute time frame, see the accuracy is 94%. The profit factor is 5.2. The maximum drawdown is ridiculously low. See, only 2,000. And see the profit factor, the profit, net profit here. It took 501 trades. And you can always see the trades on the chart. You see here. It took sale entry here. Let me show you the actual, so that you can relate to it. You can see here, sale entry here. It took sale entry here, exactly where the signal came. Okay. It took here buy entry here. You see here, and closed it with trailing stop. Where is the signal? Wherever is the signal, it is taking entry. You see here, it is buy. It took buy entry here. Selling, it took sale entry here. So everything is synced. So all the settings that I recommended are same. You can see for every buy or sale is taking entry here. Just like a buy, it took buy entry here. And most, you see here, TR means trailing. So most of the entries, the system is exiting with the trailing stop, That's why it is recommended to always use a trailing stop. You see here, system took sale trade here and exit here. And when you are already in a trade, we are not taking buy entry here because we are already in a sale trade. We are just exiting here. So at one time, we are taking only one trade. So this is how the back testing work. This is 90-minute time frame. Let me go to 150-minute time frame. You see here, the results are even more powerful on 150-minute time frame. You see, it is more than 145K. 145K. So these are killer results. So these are the self-explanatory, the evidence, the proof of the strategy, the system, that how this system is going to work, how this system is working. We can even back test it on the last 2 year data or 3 year of data. Let me go to the deep test. Okay, let's test it from 2018 to till now. And after that, we just sum up this session. It will take almost 2 to 3 minutes. Meanwhile, if any member have query, you can ask here, or you can send me text in the chat box. I am going to read your chat box as well. Yes. You can see here, this data is from, this backtest is from 2018 to till now, and see the results. You can, the list of trades, you can also go to see the list of trades, each and every trade. You see, it started, the first trade it took on 28th of May 2018. And it is, this is the profit of the trades. You can see here, profit. This is the loss. You can see here, the 2 consecutive, this is the stop loss. You can see here, SL, stop loss, profit, stop loss. So the stop losses and the losses are the part of game. You don't need to lose your confidence if your consecutive 2, 3, 4, 5 stop losses are hitting. It's part of game. You need to develop your edge in a series of trades. You need to think as a series of trades. So in a series of trades, you can clearly see with your eyes in front of you that how this system can give you an edge over the other players of market. These are all the trades you can just verify. Yeah, these are based on the historical data of last 4 or 5 years. So if the strategy is working from the last 4, 5, 10 years, I can test it even for the last from 2010 as well. But it will take a lot of time. Okay, meanwhile, it's back testing it from the last 10 years of data. I am going to read your comments. Okay. Volatility settings for crypto. Babar Malik साहब कह रहे हैं. For the crypto, I will try to arrange a separate session for the crypto and other players, other instruments of market. For the time being, you just need to concentrate on gold. Believe me, to be a consistent, profitable trader, you don't just need to trade on multiple pairs. You need only one strategy, one trading system, and a positive mindset and a confidence on your strategy to be a consistent, profitable trader. Okay, we have now, yeah, you can see from 2010 to now, we have this backtest. The system has took almost 6,500 trades with 90% of accuracy. You can always here check here the trade, all the trades from the day of first. You can see here, this is the first trade the system took on this date. So there is no manipulation here, no editing tricks. All the results are here realistic results. These are not the final results. We can always improve these results by playing with the strategy, by playing with the parameters. Let me show you how we can play with it. Just like here, we have these results with these parameters, these input, these stop loss, take profit. Yeah. For example, here, if I put very tiny stop loss, for example, if I put like stop loss of only 20 pips, let's see how it's changed the results. You will see here, it reduced the results. You see here. Similarly, like if I remove, if I reduce the TP as well, it will change the results. You see here, it changed the results. The last thing, if I disable the trailing stop here, it will ridiculously reduce the results. You can see here the drawdown here. You can see the drawdown, ups and down. At the end, it's still in profit, but you can see here a major drawdown. That's why I always recommend that use a trailing stop. Okay, guys. I think we still have some queries. This is exclusively English session, English webinar, so it is not appropriate to summarize all the session in English, in Urdu. In Urdu, we will conduct a separate session, a more customizable session, a more advanced session in Urdu language, so that our Urdu, Hindi, Punjabi community can participate in that session as well. Actually, this session was for English followers, English traders. So that's why I can't convert to Urdu or Hindi. Can you test it setting for gold on any pair? I have already tested it in front of you. There are a lot of queries here, still queries. So I think if I try to answer your queries, it will take a lot of time. Yeah. So it's always better. Yeah, I think so. I will try to conduct an Urdu session, an Urdu webinar. Yeah, where I will try to answer all of your queries, all of your questions, and we'll try to elaborate, we'll try to deliver the same session in a more effective way. Yeah, in our native language. You know, the native language is the native language. So there will be no language hurdle. Okay. So thank you all of you for your appearance. You joined this session. Yeah. So I will see you in the next session, in the next webinar. Yeah. So thank you. Once again, thank you so much. You spare your time to attend this session. So practice what you have learned today. Practice give you a confidence. It will not only make you permanent, but give you a confidence and can transform you in a better trader.
Yes, Mr. Tahir.
Yes, sir. I would like to share a very quick review of my trading journey.
Sure.
I started almost 1 year ago, and the same way the most of the losers start, that they subscribe the many YouTube videos, whatever they are. Somebody told that this video is good, I subscribe, and I contacted many of the channel admin. They told me different stories. I applied, but all goes in loss. So one day I was reading one book, and they told, if you are not familiar with the volume, you will never win any trade in forex. So then in search of volume, I got your link. I watched one video, and really, it was really one very good. The new things in my trading journey. So I contacted Mr. Hasnan. He guided me, and I got subscription. And now, in short, without VC tools, out of 100, luckily I was able to get $5 to $10 trade, maximum 2 or 3 trades out of 100. Now my result is reverse. Out of 100, alhamdulillah, I can prove that more than 90 to 95% of my trades are in winning.
Mashallah,
and wherever I lost, and I lost due to my mistake, that over trading or over lot size and overconfidence. So in short, I recommend that the people who has not yet tried VC tools, still they are far behind from the profit. Once you have the assets, once you have the VC tools, and you will see how your trading experience and profit will convert in very quick time. So really, not only me, many of my friends, I am motivating them. I am giving them live examples. They are always sitting with me, and I told them, look, I'm going to take the trade, and immediately they see my results. And most of the time, I'm sharing my results also on the groups.
Yes.
So this is my recommendation. This is my recommendation, that just understand. It's very simple. Just keep focus and do some practice and demo, and you will find the results are really very, very useful. And I am without VC, I am nothing. And whatever I am getting, this is due to the VC tools.
Thank you, Mr. Tahir. Your these kind of words, appreciation and feedback always give the VC team a motivation. This is a source of motivation, not only for the VC community, but the VC development team as well. Yeah, and yes, I still remember about when you came to me about 4 to 5 months ago. Yeah, you was only looking to earn like $10 to $20 a day. Yeah.
And last Friday, I earned $1,000 in 3 hours.
Mashallah, mashallah. May God bless you. May God.
Now I am bold trader. I am a reactive trader, and VC put confidence in me. And whatever I get the signal, immediately I know where the move will go. And alhamdulillah, 90 to 95% it goes in the same direction, which VC tools tells.
Yeah, this is because of you have now confidence. You have built your confidence, and now you have edge over the other players of market. You can see what others are unable to see. This required a kind of practice, effort.
And again, I confess that my trading was nothing, and especially the support of support of Mr. Hasnan. Whenever I send the message, instantly within 1-2 minutes, I get the reply, and I apply your logics and suggestions, and immediately I get the result. Yeah, and this is the best way that VC tool teams are always available to support all members and all subscribers. And their day-to-day guidance is really very useful for me, especially for me.
Thank you.
And
Thank you for
anybody
your
who is
appreciation.
a subscriber, they will get this one.
VC tools are nothing without the VC community. You, all the members, all the followers, traders of VC trading methods, are the backbone of VC. Yeah, your suggestions, your feedbacks, your appreciation, your criticism is always mean a lot for us. Yeah, so I encourage all of you, I suggest all of you to learn not only VC, learn any method with your full concentration, with your confidence, and apply it at least 3 to 6 months. Stick to your method. Try it, apply it, and try to improve it. Yeah, try your method only one strategy in 1 or 2 time frames, and be consistent to that method, to your method. If you are not getting any positive results in a longer period of time, like 2, 3, 4 months, then you can think to change your strategy method. Yeah, otherwise no need to change your strategy method on an every other day or on an every single trade, after every single losing trade. As I shown the back test of last 10 years, 15 years, you can see there are a lot of stop losses as well. But in a longer run, it matters that how much you have gained, how much you have lost. Always consider trading as a series of trades. 1 or 2 trades should not be cannot decide your destiny, your future. Always remember, there is always another trade in the market. The market is not going to vanish anywhere, everywhere. Market is not going to go anywhere. You just need to show patience when you have losing streaks, when you have losing movements. Don't just try to revenge from the market. Yeah, try to control your emotions, control your mindset, set your goals, stick to your strategy. Yeah, be a consistent, disciplined trader. It will transform you into a consistently profitable trader. Once again, thank you all of you to attend this session, and I see you soon in the next session. I am going to upload this video on the YouTube as well, so that other community can also get benefit from this session. If you found any value from this session, this webinar, don't forget to share your feedback in the comment section of this video. Yeah, it can help us to improve our services, yeah, to improve our performance, to improve our tools for you. Thank you once again, and I see you in the next video. Bye.